Attention A1 Trading Show fans, if you're looking to get funded, we've got a solution for you. Our partnered prop firm FX2 Funding helps traders get access to up to $200,000 in trading capital. FX2 Funding is not your average prop firm. We've chosen them as our partner because of their fair examination rules, their professional and available customer service, and they have an outstanding reputation in the prop firm space. Here's a quick look at their evaluation process. First, they don't have a time limit on their evaluations. That means that you can take your time when passing your evaluation. There's no pressure to rush your trading. Second, there is only one phase to pass in their evaluation before getting access to your funded account. Also, their evaluation fees are fairly priced and fully refundable upon passing. Once you're funded, you'll be able to keep up to 85% of your trading profits. Finally, a rule we know swing traders will love, you can hold your positions over the weekend. For a limited time, get 15% off any of their account challenges with promo code A1Trading15. That's 15% off any account challenge with code A1Trading15. If you're ready to get funded, we're dropping a link in the chat right now, and you can also find it in the description down below. So go ahead and get signed up today for 15% off with promo code A1Trading15. Now, back to the show.
All right, guys, welcome back to a big show, probably one of our biggest shows of the month. Today, we are, of course, joined by our handy dandy reporter. What's going on, James? Welcome back to another stream. And how you doing today?
Hey, thanks. I'm doing good. How you doing?
I'm good. I'm good. So, of course, James, what are we gathered here for today? And I guess just take us through the calendar if you'd like.
Yeah, so we got a really big stream today. We've been talking about it the past 2 days, Monday and Tuesday. We have CPI numbers coming out here in just a few minutes. Monthly CPI report expected to rise just a little bit up to 0.3% here. And then the yearly CPI number expected to fall a little bit significantly down to 3.1%. But not only do we have CPI numbers, we also have the Bank of Canada making their new monetary policy decision. That report will be released as well at 10 a.m. here. So we'll have a nice long stream with a lot of big news events to cover for you. Their overnight rate is expected to raise 25 basis points up to 5%. So CPI and Canadian interest rate numbers coming out this morning. So we have definitely a big market moving day ahead of us.
Yep. Awesome, James. And thank you for that. So, of course, we are coming in just about 8 minutes out to the one that you mentioned. You've got it counting down on your screen. You had that 7 minutes, 27 seconds or whatever, counting down to CPI. Now, of course, I do want to mention, guys, that as we get started, we do, as always with these streams, we want to tell everybody, please proceed with caution. A lot of people gamble on the news. It's a quick way to lose a lot of money because these things can be very, very volatile. Our strategy up front here is not necessarily to trade right before the news spike or to trade the spike or the release itself. What we do here is we talk about the broader fundamentals, the technical analysis, and we talk mostly about trading setups after the news. So, James, thank you for the overview of today's stream. We may be seeing you back here. Actually, I think we will later the stream. This is going to be a really long one today. So we'll be hanging out, sticking around, and we'll catch up with you in just a bit, James. Thanks for the update.
Yep, I'll see you in a little bit.
All right. Guys, we are just like we just saw there, about 7 minutes out here from the news. And I do want to give you guys a couple updates as well as try and do some analysis. But let me just respond to someone. Taurus in the chat says, I'm shaking right now. Okay, if you guys are shaking or you're super nervous ahead of the news, here is something that you should think about. You probably need to reduce your position size, and you probably should not be shaking while you're trading. Like, here's an indicator for me. If I can't sleep or I'm super nervous about a trade or I'm constantly checking it, my position sizing is too big and I'm more closely to gambling than trading properly. Trading properly means risking small per trade. And if that's not what you're doing right now, please take a break and do not gamble news events. I'm telling you, you guys, let me tell you from just a content creator's perspective, I have received thousands upon thousands of emails from desperate people who have lost a lot of money trading news events. Lose money if you keep doing it that way. Let's talk about the real way to trade and do it conservatively and do this the right way, risking small. I am currently trading a NASDAQ position. This is QQQ, which is just an ETF that tracks the NASDAQ. I'm long NASDAQ as of a few days ago. We're up $1,100 on this trade. And today's CPI number is either going to propel my trade further, or we may see my trade come back against me a little bit. And I am actually okay with either way. I'm a swing trader, so I'm not closing out trades or opening them up, constantly. And if some news comes along the way, yes, this news is big. I may choose to trail a stop a little bit, so on and so forth. But today, I'm going to let this market move a little bit, as I do think CPI could drop further than expected. If that does happen, I do want to gain exposure to upside on the NASDAQ. So I am currently long NASDAQ. Like I said, that's just my opinion. I could be totally wrong about the news. Nobody knows what the news spike is going to do. And anybody who claims they do is probably trying to sell you something that you don't need. Okay. So just a heads up, be very careful trading these news events. There's your warning. Again, a lot of people are going to blow their accounts today. I do this every single CPI event. And every single CPI event, I get comments from people saying, I blew my account. And I'm like, don't do that. We talk very much against doing that. Trade conservatively. I'm telling you, it's the path to making real money, is the slow and steady route. Anyways, let's see where we're at with the markets here ahead of the CPI number. Again, we've got just under 5 minutes. We've got 4 minutes to go here before the CPI number does release, and the dollar continues to drip lower. I shouldn't even say drip. It's just kind of just pouring down lower. Dollar staying weak here, completely erasing gains for last few weeks here. In fact, underneath the lows by a country mile here now, it does seem like sellers are in full control of the dollar right now. I've been bearish on the dollar. I've been looking for pullbacks and have not gotten any. So I haven't traded any USD related currency pairs, but I am of course trading the NASDAQ long, and that dollar drip as of course in this case kind of helping out. We've got some interesting characters in here today. Leader says, if I blow it, I blow it. Blasio says, if I die, I die. Let's not do some account blowing and dying. I mean, to each their own, but if you're serious about financial markets, you shouldn't be gambling news events. Let's be honest. Is anybody, do me a quick favor, guys, as we get started here, we're coming into the news in just a moment. Let's do a spam real quick. Don't gamble news. Can you guys just repeat this back to me? This would help us out. Maybe we can get the point across to people who are going to gamble this stuff. Real quick, spam the chat right now. Don't gamble news. Just spam it. Light it up in there. Let's go crazy. There's 836 of you guys. You can trade news around news, but you can trade aftermath. You can trade conservatively. You don't have to gamble the news spike. And I'm telling you, we do this every month. So I'm just forewarning you. Anyways, dollar looks incredibly weak. Gold probably looking pretty strong here. Yeah, look at this. Gold continued after our stream yesterday to push higher. I'm not long gold at this time, but as this thing does continue to push higher, this is pretty impressive. And today, however, will be a pretty deciding factor for gold. If you do get a contradictory number, something kind of both directions, meaning maybe core is stubborn, but headline comes down substantially, that would be something where we don't see a huge spike one way or the other. We see kind of a back and forth move. But if we get a win across the board, inflation, meaning inflation cools more than expected, very likely that we see gold explode higher, right? So a good CPI print, meaning lower than expected, cooling inflation, could signal a very strong upward move in the gold market. And of course, to the contrary, this thing could completely stall out and fall back into this range if that CPI print here today looks bad. So we are going to be, like I said, we are going to be trading the aftermath. I'm going to be making my trading decisions primarily after the news because I like to take into account the new information and place trades based on that. Okay, that's why we've got the spams in the chat going, don't gamble news. Thank you guys, by the way, for all of those don't gamble news. It's best to trade the aftermath, in my personal opinion. We're about 1 minute out, guys. I'm going to go ahead and set up my chart so that we can watch the reaction together. But remember, the real stuff, we usually see a dip in viewers after the stream or after the spike. Don't go anywhere after the spike, because after the spike is where we actually get into trade ideas and we can make more informed decisions. I've got gold, euro. I'm going to put my NASDAQ trade up in the top right. We'll keep NASDAQ up here. And so we've got euro and about 30 seconds out. So gold, euro, NAS. Let's go ahead and put the USD JPY here as well. So we've got some yen on the board. We've got euro on the bottom left. I'm sorry. Yeah. Yen, euro, gold, NAS. Of course, I am long NAS, so we'll see how this impacts my trade. And we're about coming in. So breaking news. Here we go. All right, and CPI number coming out now. Euro shooting up, NASDAQ making a strong move. Look at that gold move, guys. Gold, huge push, 1942. Printing. This looks like a pretty solid number here, guys. Must have come out. Look at this, decidedly strong candle so far. Let's go take a look at the numbers, see if we've got them in just now. I'm going to pull up Forex Factory so that we can take a look at the print here for CPI. CPI year over year came in better than expected, 3%. This, of course, beats the expectation. Look at this, 0.2% month over month, and we got a better than expected print. This is a win across the board. For my NASDAQ position, we're probably floating. Yeah, look at that. There we go. Up $1,600 on the NAS signal that was shared in their Discord. That is awesome, man. Nice push there. We got the number, we got the print that we wanted to, and this is awesome. This is a great position to be in. Shout out to fellow Nas Bulls. If you were in this trade with me inside of the Discord, this was fantastic. This is definitely a situation where we can start trailing stops and making some money on this. And Gold Bulls, you're probably happy here today as well. Again, big push for the NASDAQ. Love to see that. Gold shooting up 1944, big recovery move, and the euro is back up 1.1060 coming into play. Dollar yen taking a serious beating here this morning. NAS 100 making that move that we wanted to see. You love to see it. Of course, like I said, we didn't know what the news was going to be. I did have a lean to the bullish side on the NASDAQ. Clearly, that's why I held my position for the last few days. But it's nice to actually get the numbers follow through. This is a huge push on the dollar to the downside. Dollar weakness still in play here, of course, off of the back of a cooling CPI. Why does this make NASDAQ so strong, gold so strong, euro so strong, and dollar so weak? It's because, guys, this is a number that the Fed is going to clap their hands to and say, hey, that's really nice. We're seeing some progress. And what does that mean? That means they don't necessarily need to be as aggressive in their monetary policy. Monetary policy is what pushes the dollar up. It pushes gold down as, people start to go in bonds instead of gold. So there's a competitive edge there for bonds when the yields are rising. But today we got a beautiful print. And this, of course, gives the equities markets, the NASDAQ trade that I'm in, of course, benefiting hugely from this because the Fed may be less likely to rate hike. And that, my friends, is why that stuff matters, right? Fundamentals matter so much. And again, love to see this because this is a win across the board on CPI year over year, month over month, and core. The big one being core, right? The core CPI takes out things like food and energy, the more volatile components of inflation measurements. And it says, hey, look at just the actual products that are kind of sitting in the store month to month. If you do see that core cooling, which we see month over month, that's lovely to real inflation, not just food and energy, right? Gas prices can be all over the place, so core takes that out. And so what we see here today is we see a win in all three readings, which is absolutely awesome. So again, NASDAQ 100, I am still long. My goal here today, for those of you guys who are inside of the Discord watching my trade on NAS, I'm really happy to see this thing breaking through past resistance, and I do plan to try and trail a stop here today, especially once we get on this hourly candle close. I want to see this thing close strong like this, and if it does, which it does seem like it will, again, we've got 30 minutes left in the candle, so I guess I shouldn't speak too soon. But if we're able to close above this area, I will definitely be looking to trail my stop and at the very least take my risk off the table. So up $1,700 on this trade so far, and we'll see if this one wants to run for us. Not bad at all. This is also pretty good for my silver options plays. Look at this. That's fantastic. So we're in profit on both puts that I sold. Let's see what else. IWM probably looking really good. Love to see that. My puts, my bullish play on the Russell is looking really good. Dow Jones, US 30, same concept. I am basically bullish, up $200 on this one as well. It's a knockout week here for us so far. So, and I don't say this to brag because I do want to be clear. This is not every week for me. I don't know the future. I'm not a magician. I don't have a crystal ball, but this is a great week for me. So when we have great weeks, it's awesome. We just take them with the bad, right? You can have bad weeks, you have good weeks. This one just happens to be a really good one, as the CPI print is really helping us out. So again, let's go back to NASDAQ. Well, this is where we're at. So NAS 100 trade setups. Question is there anything to do with this now? So again, we've talked about the setups that I'm in. Let's go forward. What does this change for gold bulls? Real quick, guys, are you guys trading gold? Do you guys think gold continues, or do you think it reverses from here? Comment real quick, chat real quick. What do you guys think? Let me know. Are you bullish or bearish from here on gold? I'll give you my take on this. This was a big win for gold. Again, CPI printing cooler than expected probably means we see less rate hikes baked into the market's expectations. Less rate hikes could be very positive for gold. So I would say pullbacks, any sort of pullbacks on gold look really strong here today. So we might not get it today. We might get it tomorrow or the day after, or or maybe we don't get it at all. But if this market does pull back, I'm very interested on the long side. Personally, when it comes to gold, like I said, I already have a position open, so I'm not in a rush to open a bunch of trades. But I do like that prospect of pullbacks on things like gold. And let's take a look. Part of the reason for that, guys, is when we look at big money, where they're positioned. I find this really fascinating. So CPI, right, was this week. And yet what we saw is prior to this week, we saw a lot of moves into things like gold, right? So we're looking at hedge fund positioning essentially through the COT reports. We pull this data in and we make it so that we can read through this stuff. And if we look at gold, there was a big increase in long contracts this week. I'm sorry, this past week. Why does that matter? Well, big money, hedge funds, what they're buying and selling can be vital information. They have been very long on gold. And to me, this perhaps signals a bigger up move coming for the gold market. Okay, so what we're looking at is this percentage. The bar graph here shows you long to short ratios from like hedge funds and banks that are speculating on the markets. Okay. We pull this data in from the COT reports. The COT reports is this horribly ugly, ginormous text file. What our software company does, my company here, A1 Trading, we build software tools for traders, and we make it so that people can basically look at the COT data, ourselves included, Frank and I, who are behind, the creation of this tool. We're looking at things like gold, and this is a big win for gold bulls today. I know Frank is also, I think, long NASDAQ. I think he's coming in a moment. We'll get to him in just a second. I think he'll be joining the call. But again, big print here today, CPI, probably great for Frank's NASDAQ trade. I think he's either long NASDAQ or long S&P. But again, we'll come back to that. The point I want to get across here, guys, is that we were looking at this with a bullish bias here, partially because we had access to the COT data in front of us. If you guys don't have access to the COT data, here's what you can do right now. We're going to drop a link to set up a free trial of our software. If you would like to check out this tool, if you would like to get access to the COT data, we also have seasonal trends where you can study historical tendencies month to month on particular things. Like, for example, the euro. If you want to look at historical trends on the euro, if you want to look at historical trends on things like the S&P or the NASDAQ or gold, all you do is head over to the seasonal trends, grab this. So we've just dropped a link in the chat. Thank you to the producers for doing that. If you guys would like to try out this software, you'd like more information, or you'd even just like to set up a call to get training, we do free consultation calls as well for people who want to learn more about the software. My company, A1 Trading, we build tools for traders. These streams are made possible because of the revenue that we create. There are producers behind these shows. There's an office, internet, rent, that sort of thing. There's a lot of stuff that is not free for us to make these shows possible. So what we do to sort of compensate is we rely on sponsors. And of course, we also sell software tools to traders. So if you'd like more information, we don't want to sell it to you unless it's something that is actually useful to you. And so what we do is we connect with people on a one-on-one basis to get to know you, to go through the software tool and to see if it fits your trading and if it would be helpful to you. So if you'd like to learn more about that, click this link that's just been dropped in the chat and sign up for more information. It comes with a free course. You can set up a call if you're interested in doing that, and you can try out the software if that's something you'd like to do. So again, take advantage of that. And in just a moment, we're going to come back to Frank, who I think is also looking at gold and NASDAQ. Again, gold, big pop here for the gold bulls. I'd like to discuss this and more and talk about trade setups in just a moment. Like I said, we rely on sponsors. So we're going to take a quick break to hear from our sponsor, and then we're going to come back and we're going to hear from Frank and see what his reaction to today's CPI print was. Here we go.
Attention A1 Trading Show fans, if you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and we are back with my good friend Frank. How's it going, man?
Hey, how's it going?
It's good. It's good. So CPI today, what's your reaction?
Yeah, so that's good news for the indices, gold as well. I got that pulled up here on the 1-day time frame. I think the setups are kind of gone at this point, but they all came and went. But that was yesterday's setup. I think what we're gonna look at now is maybe another test at the 1970s, 1980s for gold before we see any kind of pullback. Other than that, I'm not too sure. I would say if you're long, stay long and trail your stops. But other than that, I don't see much of a setup here. I do want to look at CAD yen though, because this
Okay.
was pretty big topic for debate in the community yesterday. But so they're expected to have another hike going into today's BOC meeting for CAD, and price has just been tumbling. So I wanted to see what maybe your thoughts were on this, but I have some kind of, I would say, bullish thesis on CAD when it comes to this pair because of the two, very opposite central banks. But yeah, I just want to know what do you think would be a likely outcome for this pair, like going forward to this week?
Good question, Frank. And I think one thing I will say about CAD yen, I mean, here's the thing. Clearly, it's lost some of its momentum, but if you think about this today, right? Let's talk about what we just got. We just got really good inflation numbers. We saw core crack. We saw headline come down more than expected. Month to month looked great. I mean, this is what the Fed was looking for. And the reason that that matters to your concept on CAD yen is, let's break this down. CPI today, we got a big check mark. We got the big thumbs up on that one, right? So the Fed is probably going to be happy about this. Now, why does that matter to CAD pairs? Well, think about it, guys. I've got oil pulled up, and oil is making a very nice move here off of the reaction to this. Why would this be relative to CPI? Well, CPI coming down shows that, hey, things are coming back to normal and we may not need as many rate hikes from the Fed. Rate hikes are fearful things because they could send us into a recession. Recession causes oil to go down. And so then we finally end the chain with, why does that matter to the CAD? Well, the Canadian economy is built around heavily their exports of oil. Okay. So when we talk CAD yen, today we don't quite see a huge positive reaction. But this appreciation on oil, this perhaps expectation that things may come out softer from the Fed, could cause a little bit of yen weakness, in my opinion. We do have a little bit of conflicting stuff there from the Japanese central bank, which kind of has mentioned that they want to do some, currency stimulus, stuff like that. But in my opinion, Frank, to go with you, I actually do prefer the long side of this. Well, I think that, it has sold off and we've kind of lost that momentum. Any signs of a bounce actually could be, in my opinion, pretty good value on this upward trend. What do you think? Does that make sense? Like the CPI print does actually, that people sometimes wonder how, CPI can impact non-USD currencies. And I think we kind of broke it down there. Would you agree?
Yeah, no, I'm with you. The lower CPI is definitely somewhat of a sigh of relief for investors who are definitely anticipating a rate hike this month. And it's not to say that the Fed isn't going to. They usually are pretty transparent and they'll say, yeah, we're going to do it again. But they didn't specify when. They just said it would be another one this year, maybe two this year, to get us up into the high fives percentage wise. But according to the data, they also said they would watch what inflation does. And so core, the primary gauge, PCE, another primary gauge, stuff that's coming down finally is now in their sights. So they're probably less stressed about inflation. And then maybe July will be a hikeless month, which would be good for investors. And as we say that, the NASDAQ hits this double top. Who knows? It could be a triple top when it comes back to support. But if we were
I
looking
ask
at,
you, Frank, how are you handling your trade? You still have a trade on NASDAQ. I do as well. Are you trailing here? What are you doing today?
Yeah, so well, I guess on the lower time frames, I've locked about half of what the overall floating is. So I guess I'm not that aggressive on the stops because I want to see this thing run. But
Mhm.
it depends if we see more downside on the lower time frames and another bottom form, which would be like maybe a higher low, maybe trail underneath that. But for now, price is so volatile to the upside. I don't really want to step in the way of that.
Okay, fair enough. Yeah, I mean, see, this is the thing, right? So I've got my NASDAQ trade pulled up. For those of you guys who are just joining us here, I'll show you this trade real quick. So I'm still holding my NAS position. And Frank made a point when he first joined the call that I hope some of you guys took notes on because it's really, really important. Today is a day where if you were long on some of these things, you're managing them the trades. Today is not, in at least the way Frank and I trade and the way we look at this stuff, this is not a heavy entry day, right? When you have a market make its move like this, we had the print and you weren't involved in it. I think where a lot of people get themselves in trouble is they take today as like, oh, today's an entry day. Today I need to be joining these moves instantly, right? Whereas, as Frank made a point, these great big pushes are awesome if you're involved in them, but you've got to probably take these days, in my opinion and Frank's opinion, clearly, to treat this more as a trade management day. Trail stops if you have it, take profits if or partials if that's your exit style. Today is more of a day to reap the rewards if you are involved. Now, I know a lot of you guys are probably listening and you're rolling your eyes at that, or you're frustrated because you're not involved in these trades. And trust me, Frank and I have both been there plenty of times. Sometimes it even feels like more often than not, we're out of the trade when it makes its great moves. It's frustrating. This is trading 101. If you're looking for any sort of hype on these streams, if you're looking for get rich quick stuff, you're not going to get it because Frank and I, we try and just, I mean, we really are doing this. There's a lot of stress. We know how hard this stuff is for everyone in the audience. When we talk about this stuff today, genuinely, as frustrating as it may be, is not a day to be, in my opinion, taking a bunch of entries. Now, I will say, Frank, there are some cool things happening. Like, for example, this gold breakout. I don't think that there's like an entry to take right here, but I personally would say signs of pullbacks. Like if we get a healthy sort of digestion of this big move up, there may be an opportunity to look for gold longs. Would you agree on the gold side? I know you wanted to talk about gold when you hopped in. So what do you think on gold today?
Yeah, I would. Gold is one of those things that just has these spikes or these really large volatile dips, and then it comes back and consolidates for a while. So I've had this long bias on gold for the past several days, probably a week when I entered the trade. Um, and I've been stopped out or I've hit break even, and then overall price comes trailing back to the upside. So it's almost like just let this trade run, and um, there will probably be a lot of opportunities for pullbacks, and um, yeah, I'm sure there will be retracements, but not to, I guess, a large extent. But you'll see a pullback in this uptrend, and then hopefully another test towards the 1970s, which is what it looks like where it wants to go. So
Yep. And Frank, just for is there any, I don't know if you saw core year over year. I was only looking at the month over month number, but I assume year over year probably followed suit. But it did seem like in terms of the numbers, it was like a across the board, like a really good day. At least you could tell
yeah,
that by the technical move. Did you get a chance to see that or not yet?
yes, everything fell. Everything
Okay.
was lower than expected. So
Okay, cool. Yeah, no, I mean that is a big win, I think, for the bulls out there, whether you are trading gold or NAS or S&P. Again, just a great print. And like I said, you have to be careful with these moves because a lot of traders, uh, they get in trouble on these days, not just on the spike. They get in trouble following the spikes by trying to chase the spikes or that sort of thing. So Frank made the point. I mean, gold has been really consolidating recently. And so when we look at charts like this, don't be surprised if we do see, okay, this makes its move, but then it kind of goes into a range again or something like that. But I still think that it looks strong. Gold looks good, in my opinion, to the long side. You know, this breakout was pretty key, I would say. I'm now looking at the 4-hour chart, guys, and we had a lot of rejection off these areas. But today's kind of breakout sort of sealed the deal. Now, a couple days back, or yesterday and the day before, we got this break, price pulled back and found support. So if you caught that move, then fantastic. That's awesome. But it does seem like today would be a day where I'm more, if I'm going to trade gold, I'd be more looking for the pullback play to get long and look for continuations on a, you know, kind of the next week or so. So we'll see if that plays out. Some people are pointing out the yen pairs here today. So yeah, GJ is down. CAD yen, I wonder if it has a bounce coming on into it. A little bit of a bounce here. GBP JPY, Euro yen. Some bounces on the yen pairs here today. Very interesting to see. Frank, what do you think of the yen pairs? Do you have any yen trades other than CAD yen that you're looking at?
Probably pound yen as well, just because of the news on Monday, I believe, where Governor Bailey just pointed out that he was going to keep up the monetary tightening. So just another example of a very hawkish central bank versus a very dovish one. So any news about that just sounds bullish to me or bearish yen to me. So yeah, I like the pair. I like GJ and CJ. Although it did establish a lower low, I mean, it's rejecting those lows pretty hard on the day. So I don't know. We'll have to see where this goes, but I do have I'm bullish leaning on these pairs.
I think fundamentally I agree for sure with GJ. What I would say is I've got the just real quick, we can step through the time frames together. I've got the daily chart pulled up. Daily chart, in my opinion, looks strong, and it actually looks, we're looking at GJ here, by the way, guys, and GJ looks strong off the daily. Frank had that a similar chart pulled up with our momentum indicator on there as well. You know, what's cool here is that we actually have now seen what I would say is starting to be a proper pullback on this bigger move. Now, what I will caution you, for those of you who are not trading off the daily, which is, I know from polling the audience, usually most traders are not trading off the daily, they're trading lower time frames. So let's take it lower time frames. Let's take a look at now the 4-hour chart. So when we look at the 4-hour chart, this is where things get a little bit more sketchy to me. And so here's my approach to this. So if the daily chart is bullish, but the 4-hour chart looks weak, what do we do? Well, in my opinion, what this would lean me into doing more would be, okay, well, let's wait for the higher time frame to potentially take charge. So now we're looking at the 4-hour chart. Let's drop it down even more to the 1-hour chart. And let's say, okay, we know off the longer term, off the daily chart, things look really good. But now we've got it down to a 1-hour chart where we've got this downward structure. So we'd be looking for like breakouts, right? So like a break of structure here, like some sort of higher lows, some formations could perhaps be higher time frame trades or lower time frame trades that we base off the higher time frame. So again, the daily chart still looks strong. The fundamentals that Frank pointed out, again, reiterated over and over from the Bank of England and participants there, that the goal is to continue to tighten the monetary policy to get their really high inflation under control, compared to the Bank of Japan, which is kind of in the opposite extreme. They can't get growth to go in their economy. So in that case, they're not looking to raise rates at all. Those two things, remember, rate hikes are generally positive for a currency. That would lend us to be a little bit more bullish the pound and bearish the yen. I think we do have some comparisons that we can do, of course, on the EDGEFINDER. Frank, I'm pulling up the central bank forecasts. Walk us through your concept again, just briefly, a little bit about your pound versus yen concept you just mentioned.
Right. So if you pull up pound, you'll see the interest rate forecasts and the inflation. This is, I guess, the first 2 quarters, which is the current rate, and then Q3 and on is the forecast. And so we're looking to hold at higher rates for longer and then eventually cut next year in Q3, which is quite a long time. Meanwhile, yen is past its inflation target. It's already at over 3.5%. Its target was 2, just like pretty much everyone else. But rates are ultra low. And
Yep.
what they have forecasted is kind of, I guess, interesting because they expect lower inflation over time, but I don't think you can keep ultra loose monetary policy and have inflation under control, especially if the stock market's just going. It was on a tear this year, and the economy is expanding. So I'm not really sure where they get those forecasts from, but all I see is a long-term hold on low interest rates, and
Yep.
and that's not really what you're looking for in currency strength.
Right. And just a reminder to the new fundamentalists in the audience, for people who are newer to our streams and content, interest rate hikes or higher interest rates from a central bank generally cause the currency to be stronger, as it basically builds foreign investment interest for interest related products. Creates demand for the currency, essentially. And so what happens there is we see generally things like the pound, where they're looking to keep rates high to be strong, and the yen, which they're looking to keep rates very, very low without any plans to raise them in the future. We see that to be a weakness on the yen. So that's kind of where we get a fundamental breakout on, or a breakdown on the pound against the Japanese yen. And Frank made a good point there. So thank you, Frank, for joining us on the show. As always, appreciate you coming in for CPI post commentary. And I think we do have perhaps Ivan joining us in a bit, but Frank, thank you for coming on, and we'll see you back next time.
Been a pleasure.
All right. And yes, guys, so I do like pound yen. Frank's concept there, I agree with him. I like pound yen on the breakout to the upside. We've been pretty bullish on pound yen, but right now price action is not looking bullish. So this is where we do this often, but like a real quick breakdown here: fundamentals, technicals, sentiment. Okay. So for those of you who are newer, if you know what all three of these represent, do me a quick favor in the chat. Type I do or yes. Do you know what all three of these acronyms, FATA and SA, stand for? If you're newer here, obviously you might not know this, but this is something that we go over and over when it comes to the channel, because this is how Frank and I generally, this is our three pillars, if you will, for our trading. So we're going to go over real quick. We do have some time here today. We're about an hour away still from the Canadian interest rate decision, which we will be streaming for. So guys, if you are enjoying the stream, do me a quick favor, settle in, grab yourself something to eat or drink, chill out with us, get your charts pulled up. We're here for a while. So hit that thumbs up button and subscribe if you are new here. So if you don't know what that means, FA, SA, and TA, these stand for fundamental analysis, technical analysis, and sentiment analysis. What I look for in my trading is confluence across all three of these things. I make this point pretty often, but retail traders, they usually only look at technical charts. And while I think technical charts are very useful, they're not the only thing, in my opinion, that should be considered in trading. Fundamentals play a huge role in what the market and the macro moves of the economies of the world are doing. They play massive roles in the charts and trading. For the strategy that I use, fundamentals are huge. Sentiment analysis is looking at things like the commitment of traders data and looking at what hedge funds and professional speculators in the markets are doing. This is a huge thing. Of course, we can also take a look at the other side of things and take a look at what the retail crowd, which typically loses money, are they buying an asset in question, or are they selling an asset in question? These are vital pieces of information that I take into account with my trading. And as we get started, taking a look at more charts here, I want to kind of combine the three and talk about using confluence across the three of these to find the best trading setups possible. Okay, so what's cool is that our watch list on the EDGEFINDER essentially goes ahead and does most of the work there for us. So NASDAQ is a good example. Let's break down the NASDAQ and explain this trade, and then talk about perhaps trade setups going forward. So again, NASDAQ, let's keep up with how things are going. NASDAQ still super, super strong. And I want to go through this with you guys from a TA, FA, and SA perspective. Let's break this down real quick. And again, by the end of the stream, if you stick around with me here for a little bit, you're essentially going to see my strategy broken down in its simplest form. Okay, so give me like 5 minutes, I'll explain it. It's not simple. Well, it is simple in nature, but it's not, that complicated to pick this up and understand what we look for. So technical analysis is pretty straightforward, right? Most of you guys are familiar with all the textbook stuff. It doesn't take a genius to figure out how to do relatively simple technical analysis, and that's pretty much all I need. This chart is bullish. We're putting in textbook higher lows and higher highs. This thing looks strong, right? I'm bullish, okay? From a technical perspective, this gets the green light, right? So bullish. Now, what about fundamentals? Central bank may be backing off with this great CPI print here today. We also see economic numbers still pretty resilient. We see companies and earnings doing quite good. These are fundamentals. These are real world forces that drive markets higher or lower. This looks pretty good, right? Again, we see oil prices coming down overall, right? Gas prices are down. Things look okay. We see a relatively better outlook now than we did, say, 2 years ago. Okay. Finally, sentiment analysis. We can take a look at what hedge funds are buying and selling, and we can take a look at the NASDAQ and see, hey, are they biased to the upside or are they biased to the downside? Okay, let's pull up the smart money tracker and we can get that information within like 30 seconds. Okay, 47.99% short, 52% long. This is a slight preference to the long side, but let's take a look at COT data a little bit closer. And I'm going to pull up the NASDAQ 100 for us. So NAS 100 here. Where are you? There you are. NASDAQ 100. This is a week-to-week chart breakdown that we're looking at, or we're going to look at. This shows us recently where institutional money has been flowing. And what we do see is that money has been flowing overall into the NASDAQ. We've had a bit of a dip recently, but overall, over a longer period of time, it does seem like big money is buying into the NASDAQ. That's an extra confluence to be bullish. And we do have a very slight preference to the long side, even if it's very, very slight. So I would say that this gives us, it's a mid to pass, right? Or yeah, it's kind of a neutral reading. So in this case, let's call this okay, right? So it's okay. This still gives me enough confirmation to look for trades. So now when I look for my entries and exits, fundamentals and sentiment, guys, gives me direction. I don't trade direction based purely off of a technical chart. However, where do the technicals come in? Technicals come in for entries and exits, right? Trailing stops, managing a position, entering a position. That's where I use technicals. And so in this case, here is my actual trade. I broke down the fundamentals and sentiment. I bought this thing on a pullback, right? So I bought it on a technical pullback to a key level of what was resistance, turned support. I entered the trade right around here. It went up, it went down. Now today it's nicely following through. And now I'm using technicals to manage a position. So my point with sharing that strategy is because I don't keep my strategy lock and key. I don't, make it a secret. It's very, very straightforward. It's simple. It just requires work and keeping things up to date. If you guys, by the way, I did mention the software that I'm using to automate like 90% of my strategy. If you would like to get access to this same data, we mentioned this earlier, but we are offering trials and walkthrough free consultation calls. If you'd like to work with a trained representative who can see if this would be good for your trading, answer your trading questions, work with you about your trading journey. If you'd like to sign up for a call, or if you'd like to check out the software, get a free course on the software, if you'd like more information about this, here's how you can do so. We're going to drop a link in the chat. And then we're going to bring Ivan in here in just a moment to join us on the show. Here is the link right now, guys. Click this link if you would like to use the software that Frank and myself and some of the other A1 trading people that come on the show use. If you would like access to this software, it's called the EDGEFINDER, and our company is a software company that builds tools for traders and, of course, puts on these free live stream events. So if that would be helpful to you, again, you don't have to have our software. My strategy and the things that I share are still, I think, genuinely useful to people who don't necessarily purchase our software. But if you would like to use the same tools that we use to automate and make that process a lot easier, feel free to get more information by clicking this, setting up a call, so on and so forth. And if you'd like to, the last thing I will say about this before we jump into Ivan, and we're going to go to him about the CPI print that we got today. I do want to say we are currently doing 55% off of the software. This is probably the best price you're going to get. Actually, it is going to be the best price all year that the EDGEFINDER is currently discounted to. So if you would like information about that, here's what you can do. We're going to drop a link now in the chat. The producers here are helping us out with link drops today. Click this link if you'd like to direct message someone on our staff who can help you out to get access for 55% off of our software right now. So click this link. It'll take you to a direct message center, and you can get more information about the massive sale that we're doing. If you've been watching for a while and you're just like, okay, I'm ready, let me just pick it up for the huge discount, then message us and someone from my team will help you out. Okay, we're going to take a 30-second break or so here. We're going to come back and we're going to hang out with Ivan and see what he thinks about today's CPI print. We're going to run a quick break and we'll be right back with Ivan. Check it out. As an aspiring trader, how do you take into account all of the driving forces in the markets at once? You need the EDGEFINDER. The EDGEFINDER allows traders to access powerful market data automatically. Access key sentiment analysis studies, such as the Smart Money Tracker, which shows what hedge funds and institutions are buying and selling. Or unlock the Retail Sentiment Indicator, which shows where retail traders are positioned now. Additionally, for traders looking to incorporate fundamental analysis into their trading, get access to our in-depth economic data scanners to find the strongest trends. The EDGEFINDER also ranks and scores all of your favorite currency pairs, commodities, and indices through our signals and watch list page. This page will show you the EDGEFINDER's current strongest buys and strongest sells by pulling together all of the data. For supporters of our show, we're offering a major discount on the tool today. To claim your huge discount or ask questions about the tool, send us a message using the link that's just been dropped in the chat now. Clicking this link will open up a live chat conversation with one of our trained support reps who can get you set up with the tool today, as well as a major discount. Now, let's get back to the show. All right, guys, and we are now joined by A1 trading coach and mentor, and of course, the one and only Ivan.FX. How are you, Ivan? And welcome to the show.
Thank you very much.
I'm glad that you're back because today we need you. Today's CPI number, obviously a really clear one, right? So we've had you on the show. Ivan, you've been doing this with us for a while. We always appreciate the commentary. And we've had some prints that are hit or miss. We've had great prints. We've had bad hits. You know, we've had all sorts of things. But today seems like it's a pretty good one. What's your reaction to CPI? And I guess what are you focused on here today?
Good question. Good question, Nick. No, I literally just read a comment from Richmond Fred Barkin. He says that inflation is still too high, and I'm like, oh, no. Here we go again. So my initial response is great. We last time was 5.3, now it's 4.8. And both month over month are 0.2, which is normal, which is like what it should be at to get a 2.5% target of a year over year, and year over year headline is 3%, which is just 1% away from 2. So we're getting there. Like this, I would say this is the turning point. We are actually getting inflation under control to some extent, so this might be the end of the dollar bullishness.
No, I'm there with you too. I think a lot of people, Ivan, have been pointing to that core and saying, well, that's the problem. You know, of course, headline has come down quite a bit. The oil market cooling off a bit did a lot to help that. We saw, of course, the yearly rotation of how the year over year inflation print works. Once those really high prints kind of rotate out of rotation, right, you see inflation kind of fall in the headline. But again, the core, as you mentioned, coming down today was a really big improvement. And I think that the bears will have a hard time. Well, the stock market bears, the dollar bulls will have some problems with it. But again, core looking pretty good. The 2 year yield is down here today. We see pretty much a win across the board for what seems to be risk on and outlook for the Fed. What do you think, Ivan? So you mentioned you're pretty dollar bearish, I would assume then. Are you looking at any trades?
Yeah, also, Leah says, yes, Ivan affects a lot of people has settled on inflationary pressure. Also, the thing is, what has been until today was there has been a lot of not confusion, but it has been a lot of ups and downs. So it hasn't been clear. So I would start from today, then looking into dollar bearishness. Euro is still too high. Pound is still is too high. In New Zealand, I'm still in a range. So I will then actively from now look for pullbacks on dollar pairs. Though we're still in July, but so I don't know if I still have a lot of issues of try to trend trade it, but maybe a scalp here and there to the upside in euro would be great, and then this should then at least go to 112 by the end of it, if this is the direction we're going to go to.
Yep. No, and I think Euro bulls have had a field day, right? It's been a good last month or two here for Euro bulls, and a lot of people looking at this number and seeing pretty much a win across the board. It rules out some of the last of the dollar bulls, but the question is, do we get sort of an overextended bounce at some point, and could that perhaps produce some opportunities for people who are not already in the position? I know a lot of people in the chat, we mentioned this earlier, a lot of people feeling a bit of FOMO. They're feeling like, wow, I missed everything. The dollar's down big. The gold is up, right? It made its pop. NASDAQ is flying. Ivan, you're a trading coach for a reason. You come with the trading psychology as well as the hard trading stuff as well. So I want to ask you, people who are feeling FOMO, people who are looking at this and like, oh my gosh, I missed everything. What do you say to them?
But now is the fun. Now the fun starts. Like, I'm waiting for you to finish your question because this is the thing. It wasn't yesterday. Well, euro has risen 400 pips, but this is going to be like system bottom. But this is the thing where we're going to start rising on euro. This is going to, if this is continuing to give us bearish or lower and lower inflation every single time, this thing is going to go up for not forever, but for a very long time. And this isn't done today just because we have been raising today like 30 pips or whatever it is. It isn't half the move even. So
right.
Yeah, I'm like, now I'm excited.
Yeah, no, that's a great point too, because like you said there, the move is okay. Here's the thing, Ivan, there's this concept in markets, and I think this might be an important point for us. In the short term, right? In the short term, markets tend to overreact. This is not my saying. This is like a very common saying about big news changes, right? In the short term, markets tend to overreact, but in the longer term, they tend to underreact. Now, if we break this down here today, Ivan, you mentioned that this could actually potentially be a real pivot on the dollar. Like we might see real bearishness come into the dollar for a while. And in the short term, it's clear the dollar's made a move, but it hasn't made its long-term move, right? So we're talking about if this is truly a serious pivot, you're mentioning that, yeah, we made a move on the euro, but the big move has yet to come. Well, in the short term, you probably still don't want to chase the short-term, volatility, but looking for pullbacks, again, you may still be able to take advantage of the longer term push on things like the euro and gold. Would you agree with that?
Yeah, another way to say, if you take NFP in particular, some years ago, the initial move was 100 pips, but the aftermath was 200. So there was a 300 pip move until the trend started to change again. So just because you missed the initial move, and then now we are slowly going to unwind positions because we can't do this in one go, because people have to do their analysis, people have to do their due diligence, and even though everyone's like, oh, this is dollar bearishness, they have to do their offloading that slowly happens, and then we might even come even below the current level, but overall we are euro is then now going to start rising again. And the same thing with S&P 500 for that matter. It has now made a new higher high, and it's the highest since, I don't know, since Jesus was born, since April 2022. Okay, you missed it. Okay, and then what? Like, it hasn't ever given you pullbacks. So go back to COVID. Go back to what was that date? 15th of June 2021, when they changed monetary policy. How long has that been? That's like, was it 9 months until they started raising interest rates? 9 months of good trades. Just saying.
Yep, exactly. No, you're so on. You got to look at the bigger picture. You can't bog down your focus on I missed it today, because the markets are still going to be there tomorrow, and there might be plenty of great setups along the way there. I do want to mention for those of you guys who have never seen Ivan before, Chandler just dropped his link in the chat. He does have his own YouTube channel. He's also a coach within our Discord community. Here's the thing. We talk a lot. You'll usually take a look at the stream viewership, right? And let me be very transparent. Usually during the spikes and the high volatility and trade action, we get our peak viewerships on these shows, right? We get up to 900, 1,000 people sometimes. But what you just heard from Ivan and myself going through this is, I think, we're the real value, where you really learn something in these streams. And again, the numbers drop by half by that. The reason I point that out is, if you're still sticking with us and you enjoy this stuff, Ivan is a great resource. If you don't already subscribe to his channel, of course, subscribe here if you have not already done so as well. This is the stuff that I think that you can take with you and really seriously benefit in your trading. We bring on great individuals all the time that bring excellent value to these streams. And I do want to just say, make sure to subscribe to all of our guests when they come on. We are always dropping their links to make sure that people are able to do that. So Ivan, you are a coach within the group. You also do one-on-one coaching. So tell us just a little bit here while we've got you on the line. What does that one-on-one coaching look like? Just give us the high level. I know you don't want to plug it yourself, so I'm plugging it for you. You guys, if you're looking for one-on-one coaching, Ivan is the guy. So reach out to him. Ivan, what does it look like?
I could just take a quote from yesterday. There was one guy, I'm going to mention his name, but if you are here, I was like, I just blew his mind yesterday, because all the information I was giving to him, he was like, wow, I've never ever thought about that. So it is an amazing space, and I transform traders every day. So how is it? It's a lot of fun, and it's a lot of knowledge, and you leave the meetings pretty filled up with a lot of knowledge, and you're wondering, how on earth am I supposed to remember all that? And then we do it many times, and then they turn to be out to be great traders.
Yep, that's the thing. And guys, again, if you're out there and you're just losing money, it is worth the investment, in my opinion, to invest in something like perhaps a trading community that we offer, or that Ivan does with his coaching, webinars within the group, or his one-on-one stuff. All of that is available to you. You can reach out to Ivan using the links that we shared in the chat, so on and so forth. Ivan, I'm going to let you go. We do have more guests that want to join the stream and go over some stuff. So thank you for your commentary on today's CPI. And remember, guys, make sure to go find him and subscribe to him on YouTube. Ivan, appreciate it, man. We'll see you on the next one.
Thank you very much for having me.
Yep. All right, guys. And we are going to, in just a moment, we're going to bring in Tom. He's going to be joining us. We're going to be going over some more charts here today. Man, everything is moving. We've got just such a heck of a day here. Just to recap before we move on to our next show segment, CPI numbers came out cooler than expected in all areas. We saw CPI year over year, month over month, cool. But the big one is core CPI, month over month and year over year, delivered today. This is why you're seeing one directional moves on things like gold, the indices, the dollar. One directional moves usually come out when you get a grand slam, a home run hit like we see today. Real quick, guys, we're going to take another short break here, and we're going to come back, and we're going to be joined by Tom, and Tom is going to have more trade setups for us. So I always appreciate having him on. He's heavy on the currency pairs side. You guys know I get caught up looking at S&P, NAS, and gold a lot. So it's always nice to bring on Tom for a little bit more of the currency side. So coming to Tom in just a moment, right after this short break. Hey, Frank, did you get that EDGEFINDER work done I asked you about?
Yeah, I did, but why did you have me do this? I don't get it. I mean, why did we take away half of it?
Oh yeah, this looks just so much better. You can really read right here especially. You get everything you want just in one spot. It looks the greatest it's ever looked. Come on, Frank, you get it. It makes so much more sense now. Keep it like that forever, really. Right now, for a limited time, get the EDGEFINDER half off. Yes, 50% off the EDGEFINDER. Slash that price in half and get your hands on the tool today by messaging us down below using the link in the description or in the chat right now. Keep it like that forever, really. We are back for our next show here with the one and only Tom. Oh, wait, we have James. What's up, James? We have James and Tom. There we go. We're now all set. Hey, Tom, how are you?
Yeah, good. Thanks, Nick. Morning, Morning, James. All good.
Yeah. Good morning. I'm here to give Nick a little bit of a break, if you would like, Nick. I know that you've been going for a little while already, and we've got we're not done yet. We're going till 10. So I was gonna pop in here and take over for just a minute and give Nick a little bit of a break, and we can
absolutely
hear some more about what you're looking at today, Tom.
Before I step out, let me just say one thing. Tom, thank you for coming on the show. I'll be back with you guys in just a little bit. I'm going to run to the restroom and take a quick break. But before I do, let me also say, Tom, thank you for coming on. We just had an excellent sort of a semi-coaching session with Ivan to break up the day. I do also want to mention, I said this previously, but we do this thing where we bring on lots of guests to the show, and we really value all of our guests that contribute to what you guys see here to the trading community, A1 Trading Show as a whole. If you guys do not already follow Tom, he's another great guy to follow, to get some free help, some free resources, and learn something from. So Tom, enjoy the show. I'm going to be back. You guys take over for a bit, and everyone make sure to go subscribe to Tom. His link has been dropped in the chat, and you guys enjoy it. I'll be right back.
Cool. Cheers, Nick.
Yeah, absolutely. So what are we looking at today, Tom?
So I just wanted to, because I heard Ivan and Nick talking about, if a trade gets away from you, when should you get in? Will we get a retrace? And once we see news like this, just to carry on from what they were saying, guys, really. So, a piece of news comes out. If you don't trade the news, stay out of the news. But then once the dust settles, we can potentially have a setup or a trade. So, for example, Euro US dollar, guys. And they were talking, Nick and Ivan were talking about, you end up in this situation. So price has already moved, 80 pips, 100 pips, 200 pips, whatever it may be. And then you're thinking, I've missed the move. Okay. So just to carry on the coaching theme, there's a couple of ways I approach this, guys. So, in a perfect world, I would, let's say my idea is to buy Euro US dollar, and the news has just come out, and this is where I find myself. In an ideal world, we'd come back and we'd retrace to a nice area like this, and then we can get in. We got a nice area to put our stop loss. But as we know, guys, trading is not a perfect world. If you've been trading for 5 minutes, you'll know that. All right. So these are a couple of things I look at. So that's the perfect scenario. Price retraces to a nice area of value. We get in and we can start buying Euro US dollar. All right. But what might happen is this, and it just shoots off and you never see it again. All right. So what we can do is sort of scale into a position. Yeah, this is how I approach these potential trades that fly away. So, let's say we want to enter now. You could enter now, with, a realistic stop loss would need to be down here, perhaps, just looking at the H1 structure. All right. But, you're not going to enter 100% at this level. Okay. So what I tend to do with these moves is, let's say I enter 20% of my usual lot size. Okay. If price just shoots off, so be it. I've still got skin in the game. I can still make money, and I can potentially add to winning trades later on. All right. But if it comes down to here, potentially I can add another 20%. Okay. And if that shoots off, so be it. Yeah. I've got more skin in the game. You know, I still have, you know, a nice entry, and I make money if it goes flying in the direction we wanted it to. Yeah. Or if, again, guys, if it does come back down to our first area that we highlighted, and we really like this particular area for longs, then at this point you can enter the remaining 60% of your trade. Yeah. So if this kind of situation does happen, you can scale into a position. You know, so many traders are fixated on entering 100% of their trade, you know, take profit, stop loss. And you do need to be very rigid with your entries. But with regards to, you know, how much and the size of your entry depends on, you know, how far gone has the trade, you know. So I just wanted to follow up on that point because I thought it was interesting, guys. And this is how I would trade a runaway trade. Okay, so yeah, I hope that helps.
Yeah, being mindful of your lot size is definitely important, especially for new traders who maybe don't have the same experience, and that FOMO, that fear of missing out on that big trade, might cause a lot of people to make some rash decisions, some harsh decisions without thinking it through. And kind of taking your time and building that lot size is definitely a good way to think about it.
Yeah, exactly.
So we took a look at Euro US dollar. Is there any other US dollar pairs that you've got on your watch list today, Tom?
Not really US dollar pairs, because that news has just made it difficult to trade right now. You know, and even if you look at Euro US dollar right now, you know, although it is flying away, getting lots of strength, we do find ourselves at an important level of resistance. So I'm not keen to buy Euro US dollar into that resistance level. Let's take a look at pound US dollar. I mean, pound has just been flying. And this was actually a trade idea potentially today from this morning's analysis. But again, you know, with this particular pair, I'm still looking for a little bit of a retrace, potentially down to here for some, to get some value before we start buying this pair. So not really interested in US dollar pairs. I'm going to let that news settle a bit and sink into the market. But what I am interested in is euro pound. Okay, so euro pound I am interested in. And let me just explain why. So basically, this candle yesterday, broke this area, this important support area. Okay, so price was kind of ranging between these two levels. It was coming down, sellers, buyers, sellers, buyers, sellers. Okay, and then eventually, like I say, with yesterday's candle, with this candle here, we've broken out of that range and broken these lows. So I was looking for shorts today on euro pound. With regards to a target, I'm looking to take price down to this level here. Okay, 8468. Let me show you why that's a target as well, guys. We go out to the weekly chart. You'll see it more clearly. But there's another area of support through here where price has reacted many times. So that's why it's my target. And then if we drop down to the lower time frames, let's have a look at the H4. This is where I'm looking for entries, guys. So we've got that grey zone here, this support and resistance zone where price broke yesterday. We've had a bit of a retrace, back to the moving average 20. So I really like euro pound right now for potentially a short trade. I try to, when I take a trade, guys, I try to back it up with as much confluence as I can. So, I also take a little look at the fib levels, guys, as well. So let's just plot these fib levels. Okay, and you will see perhaps price will want to make it up to the, you know, the 0.5 area, but we're at least at the point, you know, 0.382 fib level. So, you know, price might want to come up a little bit more before it comes down, but just generally this whole area is a nice area for short. So yeah, that's what I'm looking at right this minute.
How about any indices or commodities after this the CPI report?
Okay, so yeah, so oil. So, you know, I'm based here in Dubai, so we know, you know, black gold is everywhere. But oil, I really liked oil at the start of the day. The problem is I just haven't had a retrace as yet. But if we look at the day chart, yeah, we've had a real change in structure on oil. Okay, so again, we found ourselves in a bit of a range here. All right, so this is the day chart, guys. And, you know, price came down. It's just been ranging, okay? But now we can see we had a break of this range with this candle here. And then with yesterday's candle, we also had a break of this high here and these highs here, which also meant a break of important resistance. All right, so yeah, I really like oil to the upside for all of those reasons. And we're in an uptrend now. Ever since we broke this last high here, you know, we're in an uptrend. If I zoom out a little bit, I've got a couple of targets. So this would be my first target here. Okay. And then potentially all the way back up to these highs up here. But I haven't been able to get into this trade as yet, guys, because what I was looking for was a retrace. Okay, so I was potentially looking for a retrace back down to this kind of level, you know, back to these highs, even the moving average 20, you know, in here somewhere to start buying this pair. So, you know, I'm still waiting on that, guys. So let's see what happens with oil. If I get a nice retrace or even a bit of a retrace where I get better value, you know, I'll start entering oil. Yeah, and let's take a quick look at gold as well, because it'll be interesting. Because yeah, for me, it's just been about this level here. So this grey zone through, I say grey zone, that's what I call them, but my support and resistance zone, guys. All right, so this level through here has proven to be, you know, very important. And at one point we thought gold was breaking down, but it never made, you know, lower lows, and instead, you know, it started to make higher highs, and we were kind of seeing an ascending triangle. All right, and I was just waiting for a break one way or the other. So, you know, I would have patiently waited. If it broke to the upside, I would look for longs, and if it broke to the downside, I would look for shorts. But as it happens, that news has been the catalyst to just, you know, push this daily candle. And this daily candle is, you know, I'm sure is going to stay broken. And then tomorrow it will be a trade for me. Yeah, I'll look for some retrace and some value. And I like this level back up here as a potential target. So yeah, so gold and oil, yeah, both interesting right now as well.
Yeah, so in a little less than 30 minutes here, 10 a.m. over here on the East Coast for us, we have the Bank of Canada releasing their new monetary policy report. It's currently forecasted to raise 25 basis points up to 5%. So ahead of that Canadian dollar news, we don't recommend people gambling and betting, or, you know, gambling, betting, trading news events, because they can oftentimes, you know, go in a very unexpected direction. We don't want to see anybody's accounts blown. But ahead of this Canadian dollar report, are there any Canadian dollar pairs that you're looking at maybe potentially after this monetary policy report?
Yeah, may US dollar CAD. If we look at the weekly chart, my bias is to short US dollar, Canadian dollar. But like you say, James, I'm not going to go nowhere near it until that interest rate decision has come out, the dust has settled, But yeah, the weekly chart, we had a break of this, this level through here. Yeah, these lows here. And we're in a weekly downtrend. We had a bit of a pullback, yeah, and then we got this, large wick rejecting some price in here. So yeah, and the fact that dollar weakness is rife at the moment, just to take advantage of that dollar weakness as well, and potentially come lower. So yeah, we'll see. There is a level here. Yeah, okay, so there's still this level. There's this H4 level that's been quite stubborn. Okay, so this level through here. Yeah, I think if we get a break of that as well, we can even take an intraday trade. Yeah, I mean, that's how I trade. Like I said the other day, I can be in a trade for a couple of hours or a couple of days, really. So, if we got a break of this H4 level, we could sort of take an intraday trade back down to here. But again, we need to wait for that Canadian dollar data before we do anything. So yeah, US dollar CAD. I was looking at pound Canadian dollar, but that's already hit target. Yeah, so we was, if I put this area back in. So yeah, we were buying pound Canadian dollar on my channel, ever since we broke this level. So ever since we got this bullish candle breaking these highs, we were just looking for a retrace to take back up to here. But, I don't like buying into resistance, and this is important resistance. So, I don't want to buy into that. So yeah, it's a difficult one, but we were buying pound Canadian dollar.
Yeah, I see. I noticed that you said that you were talking about that on your channel earlier this week. I'm looking in the comments right now, and somebody commented, yes, GBP CAD at Simply Forex, both positions stopped and trailed, profit secured. So it looks like someone was listening to your channel on that one, and
somebody listens, James.
He caught a nice little run in there, so congrats to you on that. I'm looking through the chat right now, and someone has been asking for Euro JPY. We can take a little request from the chat right now if you want to break that down.
Yeah, sure. All right, let's take a look at Euro Yen then, guys. So the thing with all the yen pairs, and this is all of the yen pairs really, it's a case of it's having a retrace. Yeah, because price was just crazy. Crazy bullish. Yeah. And and when the market's like this, it's difficult to trade. Yeah. There's nothing to get in on. If the market does this, trading's a lot easier. Yeah. You just buy the dips, but when trading's like that, yeah, when the market's like this and trending this strongly, it's difficult to trade. So inevitably it was going to have a bit of a retrace, and then but I'm still looking for longs. Yeah, the $1 million question is, where will it retrace to? Is it here? Is it here? Is it back down here? And the truth is nobody knows, but what we can do is look for clues. So when I say look for clues, firstly, I would need to see a bullish daily candle. Yeah, I need to see buyers enter the market. Okay, so, if we started, let's say this candle finished, big wick, green candle like this, then this is potentially, something we can look at. Yeah, because buyers are back in the market. I do not want to buy this market at present, because sellers. I need to see buyers in the market for me to start buying. All right. And we just haven't seen that yet. So a bullish daily candle is one such clue. Yeah, or or we wait for a good support or resistance level, which this potentially could be. Yeah, and then what I'm looking for, guys, is a change in structure on the lower time frames. So if we look at the H4, yeah, a trend structure here would be potentially, a break of this level. Yeah, so if we start seeing a break of trend on the lower time frames as well, this is another clue that we could start buying euro yen. Okay, it could be the H4 or it could even be the H1. We look for that structure break. Obviously, the lower the time frame, the more aggressive the trade. Okay, but yeah, I mean, we're seeing a structure break right now on H1. So, let's see, what happens here. If this stays broke, you could potentially have a trade. It would be aggressive, yeah, but you could, yeah. But what I'm really waiting for, the catalyst for all of that, is a bullish daily candle. So let's see how this candle finishes today on euro yen.
Right. Well, we got
Awesome,
Nick
man.
back. So I am going to pop on out of here. Tom, it was great talking to you like always. I hope you have a good rest of your stream, both of you. I will talk
Cheers,
to you
James.
guys later.
Thanks, James, for filling in. And yeah, Tom, I was watching a little bit of your stream. Thanks for going over some of the yen pairs. I know that was a common question we got a lot earlier. A lot of people looking at EJ and pound yen, and Frank was talking about CAD yen earlier. So thank you for those breakdowns. While we were away, I was able to manage some positions. And I do also want to reiterate what I was saying earlier about the value you guys are getting on the streams. We've got just about 400 people still hanging out with us between the two streams. I do want to say, if you guys are not already following people like Tom, it's well worth your subscriptions. It's free to do on YouTube. If you guys haven't already subscribed to Tom, go check him out. We're dropping the link now in the chat. This is free value, free game for people who are looking to improve at this stuff. You don't have to pay for these live streams or videos. They're free to you, so take advantage. Make sure to go check out Tom. Tom, thank you for coming on the show. We've got a little bit here that we're going to do before the news. I appreciate you filling in and giving us some updates on some of the currency side, and we'll see you back next time.
Cheers, Nick. See you later, mate.
See ya. Yeah, guys, so I was able to do some stuff on my NASDAQ position. Again, big pop today for the NAS trade, up at this point around $1,900 on this trade, and I did trail my stop loss. I'm going to go into more detail about what I plan to do with this NASDAQ, as well as another trade that I am potentially looking to take in just a minute. We're going to take a quick break right now, though, and come right back after we hear from a sponsor, and we'll start the next segment of the show. Don't go anywhere, because we do have CAD interest rates coming out. Markets are not done. There are more volatile stuff coming as we get going with the stream here, or end out the stream today. So don't go anywhere. We're going to take a quick break, and we'll come back and talk setups ahead of CAD interest rate numbers coming out soon. Check it out. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right. And again, I did mention we do have CAD stuff coming out here. We have the interest rate decision coming out. They are expected here today, guys, to go another 25 basis points. This, of course, in line with most of Western central banks. They're attempting to get their inflation under control here. And to do that, they need to raise interest rates. Interest rates being raised can cause economic slowdown a little bit in order to get that inflation number under control. It seems like a weird kind of thing. You need to kind of hurt your own economy in order to get inflation under control. But it's just the way modern sort of monetary policy seems to go. It's the way that things work. Anyways, we will be taking a look at some CAD pairs here. We've got about 15 minutes to go. If you guys are enjoying the stream, this is a long one for us. We went from 8:15, 8:20 all the way until now. So this is almost a 2-hour stream. A lot of coordinating goes into these streams. So if you guys are enjoying it, hit that thumbs up button. Show some love to the stream and to the people involved in making these shows possible. Thank you to everybody on the staff, of course, behind the scenes, and all of our great guests. We're going to jump into some charts here. Again, interest rates are expected to get raised up to 5% in Canada. Quick look at my NAS trade, though. I did mention that I was going to cover this. Still long NASDAQ. I put my stop loss essentially right below this market structure. What I don't want to see is a big wick and failure up in this area. If we do start to see that, I'm going to go ahead and lock in my profits. So again, pulling up Webull, which was mentioned in that short break. For those of you guys who are in the US, you can actually trade with Webull. This is how I trade indices and gold and things like that. I just trade ETFs on Webull. It's a fantastic trading platform that I absolutely love. And so make sure to check that out. In the description, there is a link. Anyways, still in the long trade. Again, my stop loss here is just below this market structure here. So it's pretty tight stop. And part of the reason here I'm keeping it relatively tight is because, the NASDAQ it's very, very bullish right now and very optimistic. And I want to be a part of it, but only if it stays in party mode, right? It's in party mode right now. It's going crazy. But if it starts to break back and fails to, hold this consolidation high, right? So looking at NASDAQ, this is a 4-hour chart. Resistance, 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 support, support, right? Consolidation here. We broke out here today, and I want to see those gains be held. If they're not held, I need to get out of my trade and take profits. Hopefully that makes sense. That's where I'm at with the NASDAQ and plan to hold this. Again, we broke out of consolidation. We're floating at this point just over $2,000. Some traders might ask, well, Nick, why don't you just take profits? You've caught the move. Well, this may just be the start of a bigger move. And that's not greedy to think so. It's greedy, in my opinion, to snatch profits just because you see them on your chart. What I think is important to note is that sometimes the best moves take time to play out, and they can become much, much bigger than this $2,000 profit that I've got floating. Some of my best trades ever have been in the $15,000 to $20,000. And it's because I hold situations like this and I just trail a stop and let the market tell me when it's time to get out. Sure, that also costs me times where the market spins back the other direction, cuts me out of the trade, and then proceeds to go on. But again, you're never going to play the markets perfectly. In my opinion, trailing stops are a great way to kind of capture a lot of the upside without all the downside. So anyways, let's take a look. You guys have some chart requests. People in the chat asking about gold. We're going to take a quick look at gold. Still strong. Nothing to do here, in my opinion. This is a no trade situation because I'm bullish, but I can't buy a move that's already moved up like this. That would be, in my book, that's chasing. And I can't short this thing because it looks so strong fundamentally and technically. I like it long. Okay, so what do? Wait for pullbacks, and that's it. That's all I can say on gold. There's nothing else further I can give you. I know some people would say, well, what's it going to do on the 15-minute and the 5-minute? I can get down in these time frames, but this is not where my specialty lies. I am more on the 1-hour and the 4-hour chart. I think now we look at the 1-hour chart, the very least is you need a pullback to like 1940. If you missed it today, I hate to break it to you, you might have just missed it. And the reality is that is okay. Sometimes people say like, oh my gosh, I missed it and my whole world is crumbling. How could I do this? And they're depressed for the rest of their day. Don't let that be you. If you missed a move in the markets aren't going anywhere. You got a setup waiting for you tomorrow, possibly, right? Don't force anything. I'm telling you, it's not a good plan to just force just because it's making a move. Sure, it could trade higher by the end of the day, but you've got to kind of just accept that sometimes you're going to miss it. I've missed it many, many times in my trading career, and I will miss it many, many more times. It happens to everyone. So today, the only thing that I can really justify is perhaps a pullback if it occurs, not when, but if it occurs. I'd be interested in longs on gold, okay? If you agree with that, if that makes sense to you, do me a quick favor and hit me with some yeses in the chat. Does that make sense? We are not here to chase. We are not here to force trades. We are not here to make stupid gambling decisions. We are here to trade conservatively and find proper trading setups. The setups here on gold have gone. If you miss them, you miss them, and that's okay. Type yes in the chat if that is okay with you. And again, today, Frank made an excellent point when he was on the show. We had 3 guests today. Wow, we had a great stream today. I'm so thrilled with all the different contributors today. We had Frank, we had James with some commentary, we had Ivan, and we had Tom, and we had myself. So it's been a great stream. I will say also, Frank made the point that, today is a day you manage trades, not a day where you enter a bunch of trades. And I very much agree with that. Today is not a day to be entering a bunch of trades. Unless this thing pulls back, then there might be something. But today is a day where if you have a trade like my NASDAQ trade, or if you were long gold, I'm not long gold. If you are long something like this, you manage the trade. You don't force anything. Okay. Andy Boyce quoted me as Evil Trader Nick says, it's not about losing often. It's about making your losers count. Yes. You want to really lose as much as you can. I'm just kidding. But truthfully, it is about your losers, right? You want to make your losers as minimal as possible. Guys, we're about 9 minutes out from CAD news. We do have interest rates being shared here from the Bank of Canada. And interestingly enough, dollar CAD down pretty big prior to the news. Again, dollar down tremendous today. Dollar is like down bad to the max. If you guys know that expression, down bad, it's dollar's down bad today. It's really, really taking a beating because, again, inflation had a knockout victory today for, stock market bulls, dollar bears. It was a great day because, again, inflation showed promising signs of cooling. And as Ivan mentioned in his segment of the show today, if you missed it, he made the point that we might be on the cusp, on the start of a bigger dollar bearish move as inflation seems to be winning over and over. The victories keep lining up for, dollar bears. So anyways, here's the thing. Dollar CAD, this market looks really weak, and we will see if the Canadian dollar has any strength that can come into it based on the interest rates. Again, rates are expected to go higher up to 5%. So we'll keep an eye on that. Again, we are about 7 minutes now out from our interest rate decision from the Bank of Canada. And a quick look at where we're at in terms of COT. CAD is really mixed. So hedge funds seem to be about 53 to 47, let's call it long to short in terms of their positioning on the Canadian dollar. So nothing super tremendous there. Let's take a look at retail. And this is really interesting, guys. Look at this. Retail positioning, dollar CAD, 68% long, 32% short. So retail traders are buying strongly on the dollar CAD. Now, if you're new to my streams, a lot of you guys are new. Do me a quick favor. If you guys are new to my streams, meaning you've only been watching for like a month or less, can you guys just say me in the chat? Let's see new people to the stream. Let us know that you're new here so that we can make fun of you. I'm just kidding. Of course not. We're happy that you're here. And if you have not already, consider subscribing for more streams in the future. But if you're new, you may not realize that in our view, the way we look at retail sentiment, Frank and I, who have designed the software that you're looking at, dollar CAD is super bullish from retail traders. We take that as a bearish signal because retail traders are typically wrong. Haven't you heard the stat, right? 90% or whatever, different brokerages release this data on the number of their clients percentage-wise that lose money in the markets on their brokerage platforms. A lot of regulations require brokers to do that. And so we know retail traders typically lose money. And so if we know that they're really long something, that in our view is kind of more of a bearish signal. So dollar CAD, retail's long, so that gives us a bearish outlook, okay? This is not the only thing that we look, but this is, again, why we have software to help us look at many things. Silly noob viewer, says Nathan. No. We are happy to have you guys here. Wow, there's a lot of you new people in here. If you have not already, like I said, hit that subscribe button. We do these Monday through Friday. These are free streams, free game to help you in your trading. We put on a show. There's a number of people that make these shows possible, and we're really happy that you viewers are here, and I hope that you get plenty of free value while you're here. Okay, so dollar CAD being long, dollar Swiss, another one, right? But I want to focus on CAD for a second because we are 5 minutes out from some big news. Nick, how often is the EDGEFINDER data refresh? CRCR, good question. Great question. So in terms of our data, we've built this thing pretty much from scratch. My team and I, we're a software company in Atlanta, Georgia. Little context behind the scenes here. We build tools for traders. This is how we make money as a company, right? So of course, I'm trading my money. Frank is trading his money, but we also run a software company where we build tools. My background is in software engineering. So we've launched this project to essentially help traders find more insightful data. If you want more information on the data sources, you can always go to the data sources and updates tab. This will give you all the information, where we're getting the data, how often it's pulled, how recent it is, so on and so forth. If you guys, by the way, while we look at this data, if you want access to retail sentiment, if you want access to the smart money tracker, our COT data, if you want access to inflation reports and forecasts and things like that, real quick, we're going to drop a link in the chat. If you guys would like to try out the software, get a free course about the software, read through our manuals, read through the data, read through our strategies, any of that, here's how you can do so. We just dropped a link. Thank you, Chandler, for that. Producers on it with the links today. Click this link to try out the EDGEFINDER or find out more information about it. And if you're interested, you can actually set up a call with a trained representative who can walk you through the software tool to see if it's a fit for your trading. But again, find out more information by doing that. And the last thing I will say is we are currently also, for the non-new people who would like more information about the software, we're actually doing a 55% off sale right now on the software. If you would like information about that sale, it is the biggest discount we have ever done on the software. And if you would like information before that ends, click this link that we're dropping now. This will take you to a direct message center where you can chat directly to someone who is on the support team for the EDGEFINDER to get your access today for 55%. That is the biggest discount percentage-wise that we have ever done off of the software and probably ever will do. We probably will never crest 55%. And we were actually talking about how it is probably priced too low for what it is and the amount of investment and work that we put into building this tool. But anyways, take advantage of it. I do genuinely mean that. We don't plan on making the sale that big again. And that is not just some cue to get you to try and buy it. I genuinely mean that. I don't think we'll ever do 55% off again. So take advantage of it. It really is the lowest price. Anyways, let's talk about CAD pairs. CAD yen, right? We are, by the way, we're just over 2 minutes out. We're going to watch CAD pairs as we do get the number. New people who are just tuning in, what we're waiting for here is we're 2 minutes out from the interest rate from Canada. This is going to be a big market mover. It will actually probably move things like gold as well. So even if you don't trade CAD pairs, this will likely cause some volatility. So I do want to pull up some charts here, get ready for this news event. So let's do this. CAD yen, we're going to put in the top left. And I like to pull up 15-minute charts for the reaction, just because, I don't know, it's fun. Euro CAD, I don't have any CAD trades open to be straight up. I don't have any CAD trades open, though I do have a NASDAQ trade open. We talked about that earlier. Look at that. NASDAQ does not want to quit. That's awesome. I think we're up probably like 2,200 bucks on this trade. That's turning out to be a really nice move for us. Stops trailed on this one. And again, floating about $2,200 so far on this trade. I didn't take any new trades this week so far, at least not on the, I think I took an options trade. Either might've been last week that I entered it. I haven't been trading that much, but I've got this one quality trade that just keeps going, that NASDAQ move. Let's not dilly-dally here. We've got CAD yen top left, Euro CAD. We've got to pull up dollar CAD to watch this reaction. 15-minute charts all around, by the way, guys. And let's pull up one more. Let's do GBP CAD. All right, pound CAD, dollar CAD, CAD yen, Euro CAD. We're going to react to the numbers and, of course, talk about where things may be going. What's the price? Atlanta Premier Catering. Hey, you're from Atlanta. What's up? Hit us up. Message us. We've got the direct message center if you do want more information about our software. So direct message us. You can get more information about the current discounts and all the stuff that's going on. All right. Here we go, guys. We're going to do breaking news here. We're 10 seconds out. And here we go with our number. Dollar CAD pushing lower. Pound CAD. CAD JPY making an initial push. Dollar CAD shot down and kind of came right back. And there it is. Interest rate did come out at 5%. We were expecting a rise in interest rates. So we got up to 5% from 4.75%, the overnight rate from Canada. And so we do see that number coming in, printing. Dollar CAD making a continued push lower. Pound CAD goes lower. Is there any reaction here to gold? Let's see. Gold, not too much of a reaction. Dollar CAD continuing to push lower. My goodness. Euro CAD selling off. Again, this would allude to CAD strength here, right? CAD yen shooting up. Euro CAD shooting down shows the CAD is putting pressure on the euro. Same thing with the dollar CAD, and gold kind of unchanged here. Again, for CAD bulls, nice move there. CAD yen making a bit of a push off. Frank talked about this pair earlier. I wonder if he took a trade on this one. Frank does share his trades in the Discord, so I could check, but still in a downtrend, I would say, off the 4-hour. But the question is, can we get breakouts here? And that may be the bigger move to ask ourselves is, you know, CAD yen daily chart pulling back, finding some support here. Is this the start to kind of a bigger push up? I think it's a little bit early to tell, but we did get some nice numbers here today out of the Bank of Canada. Again, rate hiking as expected. So really, oh, Frank did enter. Someone in the group just let us know. He entered 106.4 or 105.4. Oh, nice. So Frank jumped in this one. So he's in a profitable trade right now on CAD yen. So good for Frank on that. Back to the NAS trade, still in profits. Stops trailed. So I'm probably, you know, truthfully, I probably will not be taking more trades today. I've got everything that I need in terms of setups. I'm just trailing a winning trade. I love this sort of situation. These are the best moments when you're just trailing a profitable trade. Managing a trade is so much more fun than trying to hunt entries all day long. Of course, entries are a required part of trading as well, but I prefer to be managing trades, obviously, because that means I'm trailing stops on profitable ones. So yeah. Jason, Euro Swiss. Yeah, Euro Swiss continues to push lower. I do actually have a long position on Euro Swiss, but it's not a short-term trade. It's a longer-term swing trade. This one really selling off here today. Yeah, look at that. Stretching past the Bollinger Bands and everything. Crazy, crazy, crazy. I don't know what's going on with Euro. Is Euro dollar giving back some gains? No, it seems to be the Swiss franc. The Swiss franc coming in strong here today. Dollar Swiss is probably dropping off a cliff. Yep. Swiss franc is strong. I do have a long position. I mentioned it is a really small trade, and I have plenty of room that I plan to add to this trade. This is more of a mean reversion strategy that I'm running. It's different than my traditional trend following stuff. But again, weekly still looks really weak. So I might be holding on to a long trade for a while. There's some positive carry to that. So if you're not a carry trader, you know, probably not one to be long. But as a carry trader, I'm collecting positive swaps for holding this pair long. If you don't know about that, feel free to search up Trader Nick carry trades. Guys, I got to get off the stream. It's been almost 2 hours, and I feel my voice giving out. If you guys enjoyed this stream, I just want to let you guys know that we really, really appreciate our audience. You guys make these shows possible. Obviously, we rely on sponsorships and, you know, stuff here, but we're trying to do something. We're trying to create the best show on the internet for traders. We're trying to put together a network of people, of great guests and vital, powerful information for you guys. If you have not seen the rest of the stream today, or you just tuned in and you just see me, we had several great guests that came on and contributed. Feel free to rewind and learn something from them if you have not already. Guys, we appreciate you as always. Me and the team want to say a big thank you for these long streams. We love doing them. They're a lot of work, but we love doing them, and you guys are so supportive. So thank you so much. Have a great rest of your day. Happy trading, and we will see you back in the next one. Have a great day.
And And that concludes today's show. Our goal at A1 Trading is to keep you up to date with the latest market coverage through our daily videos and articles. If you like our content, make sure to subscribe for more. You can get funded today up to $200K with FX2 funding. Use our code A1Trading15 for a special discount. From all of us at A1 Trading, have a great day, and we'll see you next time.